So, you want to learn how you can lose money like a pro? Well, then you came to the right video, because this is how much money I lost for the first few months of the year. Luckily though, it seems I'm not the only one, because even looking at S&P 500, the 500 biggest company in the US, altogether since the beginning of the year dropped by over 16% after a fantastic year last year where the market grew over 20%. Now it's been a massive correction and times aren't really looking bright at all, on the contrary. So you see not just individual stocks, but the entire markets are dropping, and it's not only in the US, it's across the board in Europe, Asia. Of course we know the reasons, there are a lot of factors impacting this. We have an ongoing situation in China that continues to impact global distribution and getting parts to the respective factories to produce goods. Then the situation in Ukraine, and on top of this, high inflation with the Fed now trying to increase the interest rates to counter this. So all these factors together definitely not very friendly towards business. But of course it's not just stocks, as I said, it's the entire market, and that includes Bitcoin as well. And Bitcoin for the first time in a long time actually dropped below the support level of $30,000, which was kind of this magical number which we shouldn't go below. So a lot of first time investors, they really don't know what to do, so they panic, they rush out, they sell their assets at a loss. I mean, now 40% of Bitcoin holders are actually at a loss with their total holdings, which is quite understandable. I guess a lot of people who invested in 2021, even in stocks or other markets, most of them are at a loss, because obviously we were quite at a higher rate than that we are today. So that's natural, myself included, because I started buying at around 40,000 mark and then went up over time. So now I'm definitely below, and that's fine, right? Because we do know that the markets go up and down. But the problem here is liquidations. In the last few days, we have seen $1 billion worth of liquidations. I mean, that's a massive number. That basically means when people took a margin or leveraged their crypto to buy more crypto, which is good until the prices continue growing. But if it reaches a certain point or falls below that point, basically you don't have enough collateral anymore to protect your loan. It's basically if you take a loan out of your house, right? If a house has a value of 1 million, you can take, let's say, 100,000 out of it because you have the house to protect your loan that you took against it. Now, let's say for whatever reasons, the house disappears, the house burns down, you don't have the house anymore, insurance doesn't pay, so the house is gone. So you still owe the bank 100,000. So what they will do, they will basically have the right to liquidate any other assets you may have. In case you have a car or in case you have any other holdings or stocks with them, they can sell those to basically offset the loan that they gave you in case you can't pay that back. And this is the same that happens with cryptocurrency. Basically, when people take a loan against it, like you can do on Nexo and many other platforms, even a lot of institutional buyers do this, they take out a loan against their holdings, which is good to keep a certain value. But if that halves or even lower, then they start running into issue. They have to pay back. If they can't do that, the bank or the exchange in this case will basically sell your remaining holdings to get their money back. And that's kind of triggers a downward spiral, because once a lot of people have a threshold of, let's say, 30,000 and we go below that, there's a chain reaction, because then a lot of people start selling and this kind of drives the price down further. So these liquidations at certain trigger points are really not beneficial, but they do happen because, obviously people are very sometimes too optimistic in the appreciation of certain asset class prices. Another issue we've been seeing is with the stable coins, because stable coins usually they try to mimic a certain currency, in this case the UST, which is basically mimicking the dollar 1-to-1. Ideally that should always float and there shouldn't be any fluctuation. That's why it's called stable coin. So unlike other cryptos which kind of float with the market, the stable coin is sort of, as the name says, stable. However, the problem here is that also, not the first time, it happened before, but once again with Terra and Luna, this time there was actually a deep pegging, and you can see over here how the line was really quite stable for quite some time, and then immediately there was a drop. So I think they're still investigating what exactly happened. Some people say the market was manipulated, etc. I'm not an expert on Terra or stablecoin, but the issue is here, a lot of people are worried. There was a lot of money. I think it was one of the 12 biggest coins in the crypto world basically. So these things are really more worrying and people might pull out their money even more. They've been also invested as part of Bitcoin, they had a Bitcoin collateral. So how will that impact other prices remains to be seen. A lot of people have been holding UST to diversify away from the dollar and kind of have it sitting in the exchange to either get staking rewards or be able to on the move quickly send money or convert it to other currencies. A very nice and liquid asset, but this kind of gives a lot of worry. And personally, if I had stable coins, I would definitely look into diversifying, because yeah, that looks really risky, and I know a lot of US regulation will soon come, mostly targeting stable coins first. But it's not only crypto. Everybody always bashes crypto, and when you read the news, it's Bitcoin is going down, all the crypto's going down, this is the end of the cryptocurrencies. Let's be honest, it's not just cryptocurrency. Right now, it's the entire market. I mean, look at tech. I mean, they lost $1 trillion value in a few trading days. I mean, $1 trillion, that's crazy amount of money. I mean, when you see the total value of the most valuable company in the world, Apple, is $3 trillion. So basically 1/3 of Apple was just erased from the entire tech market. So that's a huge number. Let's look at it on the chart. When you see over here for the around last year or so, I mean, actually Bitcoin of all of them dropped the least, only by 12%. But then you have some other stocks over here like Amazon, which dropped 36% since about a year ago. Then we have over here PayPal that dropped 73%. I mean, that's a staggering number. And then lastly, we have Shopify, which dropped by 77%. I mean, that's a huge number. So when people say Bitcoin is volatile, I mean, look at those tech stocks. They're even more volatile. Really, really shocking. You see, it's across the board. It's not just cryptocurrencies. When people say, Kai, why do you invest in crypto? It's too volatile. Well, look at those graphs. It's not just crypto that's volatile. The entire market is at the moment, which of course gives a lot of buying opportunity. But really, let's remember that it's not just cryptocurrency. On the contrary, actually, cryptocurrency starts following the overall markets more and more, which, you know, can be good or bad. I do hope that one day it will decouple, because a lot of people invest in Bitcoin to be a store of value. So it shouldn't follow the overall market too much. But yeah, as you can see over here, it looks like Bitcoin is actually safer and less volatile than many other tech stocks out there. I mean, even Cathie Wood, which is one of the most celebrated investors these days, very aggressive lady from ARK Innovation, and her funds have been really celebrated in the last few years for investing into high growth stocks and up and coming tech stocks, etc. So yeah, she was always the sort of poster lady of the investing world these days. However, as we can see over here, ARK Innovation, which is sort of their flagship fund, also dropped since the beginning of the year by 57%. I mean, that's a massive, massive drop. Again, more volatile than Bitcoin even. And again, you paying those money managers a monthly fee, and that's not low, right? So for them to really look after your funds. So if I spend my money on them and still get a return of minus 57%, I mean, really, really not exciting. And I think she's really coming under fire, because obviously that's worse than the S&P 500. So once again, it just confirms, if you don't know what to do and where to start, put your money in the S&P 500. It's probably the least volatile and the safest you can be in right now. And it also makes me feel better about my losses, because it still seems to be better than Cathie Wood's. So you may ask yourself, Kai, so what should I do? What's the solution to this problem? What can I do right now in these volatile markets? Well, don't worry, I got you. And here it is. Invest in Cyborg Shiba. As you can see, it pumped by 240% in a matter of hours. So this is the answer. Sell all your assets and invest it all into this. Guys, I hope by now you know me a little bit. I'm just joking. Please don't do this. That would be the worst idea. I don't even know about this coin, and I really recommend you stop investing into coins you have no idea about. There's so much pump and dump, so many scams out there. So please stay away from that. That's really just a joke. Don't put your money in there. Maybe it worked during a bull market when everything is going up, but right now that will be probably one of the worst ideas, to invest into something you have no idea about. So then maybe start reading charts and understand where the direction will go. Well, honestly, again, it looks very nice when somebody explains to you in hindsight where the stocks will go, because hindsight is 20/20, right? It's easier when you know where the price is going to go. If they were so smart, why are they not the wealthiest people in the world? Because they can outperform the market consistently over time. It just shows to me nobody knows the future. It can go up, it can go down, it can go sideways, right? These are the three options essentially. And looking at the charts, it's nice, you can kind of get an idea, but nobody knew that Bitcoin would go down once again that badly in these times we're in. So all these charting people that I watched a few weeks ago, they all predicted it to go 100,000. Now they say, actually, now it's going down to less than 30,000. Well, we already seen it going down to 30,000. So personally, I stay away from this. Maybe if you're professional, but still I think it's a question of how long you look at those people. I mean, maybe for a period of 1 year, 2 years, they can, but for 20, 30 years, nobody consistently outperforms the market that significantly. So I always stay away from pattern reading. I don't even look at it, because honestly, I don't think anyone can really predict the future by looking at past patterns. I just don't think it makes much sense. So instead, what I will continue to do is dollar cost average into my various investments. I will continue buying a few stocks that are on sale, of course ETFs, and of course my beloved Bitcoin and other cryptos that I see are really attractively priced right now. I'm buying below 30,000 euros, which I've never managed before. As you can see here, I will continue dollar cost averaging. So these are my purchases over time. So I'll try to do every other week or so, depending on where I see the price going. And yeah, recently I kind of dollar cost averaged my way down. The highest one I bought, I think, was close to 55,000 euros. So, on that purchase, I'm quite down a bit, but now I have a good buying opportunity of buying my way down, so to say, to be ready once the market appreciates in value again in the near future. And briefly, just to highlight what is dollar cost averaging once again, because a lot of people maybe hear this, but they're not very clear on what it means. Instead of taking a lump sum, and I really like this example here that Binance given, in this case $800, you just invested once and then see where the market goes a year later. You basically take the same amount, $800, but divide it into 8 parts, in this case $100 each, and you just religiously invested every single month $100. And you can see here what the difference is in terms of return. So the same $800 when you bought it and the market did whatever it did, but it arrives at the same end value for whatever is the reason. On the other hand, if you took the $100 and bought every single month, sometimes you buy a little bit higher, sometimes a bit lower, sometimes a bit higher, sometimes a bit lower, right? Because you don't know what the market is going to do, but you just continue buying anyways. And over time, even though it arrives at the same number, the fact that some of the time you bought below, some above, on average, let's say you bought a little bit below the market, still if the price ends the same where you would have invested your $800, you actually made a gain because you managed more times to buy below the initial pricing point. As nobody knows the future, that's probably one of the smartest approach, and that's what all the great investors, Warren Buffett, etc., keep on preaching. Dollar cost average, it just makes so much more sense because nobody knows. Right now it looks below 29,000. I was really tempted to put a lot of money in buying additional Bitcoin because my goal is to finally own 1 Bitcoin. So I could have just dumped all of it in the market right now and then finally get there. But then who knows, maybe a few weeks down the line, the real recession starts kicking in. We're gonna see prices of 20,000 and I'll be sitting there, oh my God, no more money to spend. And yeah, the market just dropped even further. So nobody knows where's the bottom price reached. So what I'll continue to do, just keep on buying regularly whenever I feel the price is right. And yeah, over time, hopefully it will average itself out. And once it starts appreciating again in value, I will reap the rewards from it. And one more thing to mention here, please try to stay away from margin trading or leveraging your investments because you've seen so many liquidations happening and so many people getting wiped out of the market by using money that they don't have, because once you lose money you don't have, you're gonna really be in a difficult situation. So only use the money that you can afford to lose. If you lose it, it really hurts, but it's not gonna wipe you out. So try to stay away from margin trading or leverage trading unless you're true professional. Even then, personally I would stay away, but I would really recommend you, for us retail investors, especially in a bear market, I don't see much sense to leverage trade your investments. So in addition to Bitcoins, I will also continue buying Nexo tokens because, as you know, I'm a huge fan of the Nexo platform where I stake my Bitcoin and I get high staking rewards. I'm on my way to get $10 a day, which will be $300 a month. And I will continue to buy more Nexo tokens to have the highest loyalty level that will give me the highest rewards on my staking and other benefits on the Nexo platform. And Nexo has been holding up quite well actually. Of course, it dropped like pretty much every other cryptocurrency as well. But when we look here for the 1 month chart and I overlay it with the Bitcoin chart, you know, they're very much moving in parallel, as do most cryptocurrencies, right? I mean, Bitcoin is kind of the big one that has a market dominance of 41%. So all other coins more or less move in swings in parallel with Bitcoin at this stage, which is good to see. And Nexo is no exception there. When we look at holders and money at the moment, still 60% are in the money. So that's more than in Bitcoin, obviously. There's a high concentration of large holders. The same is true for a lot of altcoins. The same was true for Crypto.com, even more large holders. So these are the initial founders or people working on the project that have a huge percentage of those coins, which, you know, is fair enough. But also what is good to see, majority of them are long-term holders. Of course, the overall sentiment is very bearish, but so it is for pretty much any stocks right now. And again, for me, that's just another great buying opportunity. Personally, I still think we're early on. It might get way worse. I mean, let's be honest, we haven't really seen any financial crisis yet. I mean, the system was pumped up artificially with all these stimulus checks and money printing measures. So overall, we haven't really seen any major financial recession since all these things that we had over the last few years. So I think there's gonna be a reset. It's gonna be painful. I don't like it. I wish it wouldn't be coming, but I think as investors, we can't let our feelings take over, but we have to keep a rational mind. So let's look at the facts. Let's see what is most likely going to happen. And based on this, we can do our decisions accordingly. So for me, that's why I continue dollar cost averaging. I will not just buy the dip because the dip may keep dipping. And yeah, as I said, nobody knows when is the bottom reached. So that's why I will continue, hopefully dollar cost averaging my way down. until I accumulated enough of the stocks and cryptos I want. And then over time, as the market rebounds, which naturally it will, life has always been cyclical, right? There's ups and downs. So as bad and painful as it is right now, and you've seen my losses, I mean, this really is painful when I look at it. But again, I use money that I can afford to lose, even though I don't want to lose, and I haven't sold it. So I technically haven't lost it. It's just paper loss. So I will wait it out until things get better and then decide to either sell it, cash out. So please, please, please don't panic sell. Don't follow all the latest news, because the more you read, you really start thinking the world is going under. And take a step back, look at the macroeconomic factors, and based on this, make your decisions. It's not as bad as sometimes the news wants you to think it is. Don't forget, they make most of their money on negative headlines. So the worse things look, the better for the news, because they get more clicks. So yeah, guys, I hope you found this useful. If you did, please give it a like, subscribe to the channel. It really means the world to me. As always, thank you so much for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.